Hey there, it's Iggy from the Investing Iguana. Today, we're diving into First REITs, buy now, says PhillipCapital. In this video, I'll break down why PhillipCapital is bullish on First REITs, making it super easy to understand. Whether you're just starting out or looking to sharpen your REITs investing skills, this video is for you. We'll cover everything from First REITs' current situation to the reasons behind PhillipCapital's optimistic outlook, using real-life examples and simple analogies. Imagine knowing exactly how to spot undervalued REITs and grow your wealth right here in Singapore. Exciting, right? Stick around, because by the end of this video, you'll have a clear understanding of First REITs' potential. First REITs, a healthcare real estate investment trust listed on the Singapore Exchange, has been navigating a challenging period in recent years. The REITs owns a diverse portfolio of 32 healthcare properties, including hospitals in Indonesia and nursing homes in Singapore and Japan. However, First REITs' unit price has been under pressure lately due to various factors. In Indonesia, where the majority of its assets are located, First REITs had to restructure the master lease agreements for 14 of its hospitals to ensure a more sustainable long-term lease structure. This restructuring, effective from January 1, 2021, involved extending the lease terms to December 31, 2035, and introducing a revised rental scheme with a minimum annual escalation. Additionally, First REITs divested some of its Indonesian properties as part of its strategy to reshape its portfolio for more efficient capital growth. Despite these challenges, PhillipCapital, a brokerage firm, has recently expressed a bullish view on First REITs. They initiated coverage with a buy rating and a target price of 30 cents, seeing potential in the REITs' future growth prospects. PhillipCapital expects First REITs' distribution per unit, DPU, which is the dividend paid out to unit holders, to grow by 12.5% in the 2024 financial year. This optimism is driven by several factors, including the expectation that First REITs will resume acquiring properties, supported by its sponsor, OUE Lippo Healthcare. The REITs' valuation also appears attractive, with an 8.9% distribution yield and a 25% discount to its book value, suggesting that the market may be undervaluing its assets. Furthermore, First REITs has a strong weighted average lease expiry, WALE, of 11.3 years, providing long-term cash flow visibility. While risks remain, such as the pace of recovery in medical tourism in Indonesia and Malaysia, which could impact the performance of First REITs' hospital assets, PhillipCapital believes that the REITs is well-positioned for growth as it looks to expand its presence in developed markets like Singapore and Japan. So why is PhillipCapital so optimistic about First REITs' future prospects? Well, they expect the REITs' distribution per unit, DPU, which is essentially the dividends paid out to unit holders, to grow by a healthy 12.5% this year. In simpler terms, if you own units of First REITs, PhillipCapital believes you're likely to see a nice bump in the regular payouts you receive, but what's driving this expected DPU growth? The key factor is that PhillipCapital thinks First REITs is poised to start acquiring new properties again, with the backing of its sponsor, OUE Lippo Healthcare. Now, you might be wondering, what exactly is a REIT sponsor and why does it matter? Think of a sponsor as being like a parent company to the REITs. Just like how parents often support their children as they grow up, REIT sponsors provide a pipeline of assets that the REITs can acquire over time to expand its portfolio and drive growth. Having a strong, supportive sponsor in your corner is a huge advantage for REITs. It means the REITs has a ready source of quality assets it can potentially buy, rather than having to go out and hunt for acquisitions on its own. It's kind of like having a rich uncle who's always ready to help you out when you need it. In First REITs' case, OUE Lippo Healthcare has a portfolio of healthcare properties that it can potentially inject into the REITs over time. As First REITs acquires these assets, it can generate more rental income, which in turn supports higher DPU payouts to unit holders. So PhillipCapital's bullish view on First REITs is underpinned by its confidence in the REITs' ability to tap its sponsors' resources to drive growth in the coming years. Another thing going for First REITs is its valuation. It's trading at an 8.9% distribution yield, which is pretty attractive in today's low interest rate environment. You're basically getting paid a good chunk of change while waiting for the unit price to appreciate. It's also trading at a 25% discount to its book value, which means the market is valuing it for less than what its properties are worth. PhillipCapital sees a couple of potential catalysts on the horizon that could give First REITs' unit price a nice boost. One of these is the possibility of First REITs acquiring properties from its sponsor, OUE Lippo Healthcare, at attractive prices. Having a strong sponsor in your corner is a major plus for REITs, as it provides a pipeline of assets for growth. Another potential upside is positive rental reversions. This basically means that as leases come up for renewal, First REITs may be able to negotiate higher rents from its tenants. Of course, as with any investment, there are risks to keep in mind. For First REITs, a big one to watch is how quickly medical tourism bounces back in key markets like Indonesia and Malaysia. Many of First REITs' hospitals in these countries rely heavily on medical tourists to drive revenue. So if the recovery in medical tourism is slower than expected due to lingering pandemic concerns or other factors, it could put a damper on the REITs' performance. All in all, PhillipCapital seems to have a fairly bullish view on First REITs, driven by its attractive valuation, growth prospects, and potential catalysts. But as savvy investors know, it's always crucial to do your own due diligence and carefully weigh the risks before making any investment decisions. REITs can be a fantastic way to get exposure to real estate and generate steady income, but understanding exactly what you're buying into is key. So be sure to dive deep into First REITs' financials, portfolio, and growth strategy to see if it aligns with your own investment goals and risk tolerance. And of course, never invest more than you can afford to lose. With the right approach, First REITs could be an intriguing opportunity for income-seeking investors, but as with any investment, there are no guarantees. Thanks for sticking with me through this journey into First REITs. Bye now, says PhillipCapital. We've covered a lot today, from First REITs' rough patch to its attractive valuation and growth prospects. I hope you found the insights useful and that you're now equipped with the knowledge to make smarter REITs investment decisions. If you enjoyed this video and found it helpful, please give it a thumbs up. Don't forget to subscribe to the Investing Iguana for more tips and strategies to help you navigate your REITs investing journey. Hit the notification bell so you never miss an update. Feel free to leave a comment with any questions or REITs you'd like me to cover in future videos. Your feedback helps me create content that truly benefits you. Until next time, happy investing and stay financially savvy.